market, it's been a very interesting activities that shaped the market in 2018. And we believe that in 2019, that upward trend may persist.
Because of election. Well, let's look at part of the objectives for externalizing this debt. So it was to free up the space, the bond market space, the T-bills market space, of course, for domestic players, for corporate bonds to be more active and all of that. Did we achieve that at all?
Yes, in terms of the amount or in terms of borrowings, you see in the first half of the year, we were able to see corporate issue commercial paper
CPs.
at very attractive rates. But when you look at the last quarter of this year, that was not possible again in view of the high interest rate environment.
Right.
So which was one of the major objectives of the government, trying to reduce in terms of the borrowings domestically. And that has really helped for some of these corporates to reduce in terms of their debt burden, because of the rate when you compare it to bank rates that they would have if they have gone to the banks to borrow these funds. So that objective was achieved. You look at even in the bonds market, because of the reduction in terms of the borrowings, that also reduced the yield in the bond market, if not for the sell-off that we saw across emerging market that affected Nigeria.
Okay, so we also saw the federal government renewing its interest in Jara Sukuk this time. What do you make of that?
Yes, I think it's a very positive initiative, because when you look at typically what we've been having in Nigeria is when you borrow, it's actually not tied to project. And when you look at the Sukuk, it's tied to project across the 6 geopolitical zones.
Right.
And that can easily, at least to a large extent, be assessed, and you can easily look at its effectiveness. So currently, I think the last one that was concluded last week, well, 132 billion was subscribed, and that's about 32 billion over the 100 billion target. And that would also even encourage even the contractors that will be appointed because to work on those roads, because the fund is already available ab initio. So we feel that government will also be looking at different alternatives. You also saw this year, I think, a green bond was also raised. We'll be looking at infrastructure bonds, educational bonds, which will be tied to projects, because the major concern is not even about the borrowing. If we can borrow and channel into productive areas that can help repay this in the future, then I think really there's no concern about that. But borrowing to pay salaries is the major concern.
So those of our heads will have to find a way to manage that. Okay, let's go to the equities market and look at the fact that year to date we've lost some 18.8%. We almost touched 20% a few weeks before Christmas, or a few days before Christmas. What are your thoughts on the performance this time? What would you pick as the top best performing stocks, and which were the top worst?
Yeah, looking at the top performing stock based on year-to-date performance, CCNN ranks has gained about 110%, followed by Sterling Bank and Unity Bank. And in terms of
Unity Bank actually had the second spot at the time until yesterday.
You'll see, but when you look at in terms of this is looking at year-to-date performance, but because even if you look at the last 1 month, Diamond Bank has gained over 200%. You look at Forte Oil has gained close to 76% in the last 3 weeks. And but within the market, there have been opportunities. But you see most of the stock, like market started on a very high note in January. When you look at in terms of the performance to date, based on January performance, is down close to 30%, which is very significant. And that can easily be traceable to the sell-off from foreign investors, because they still play about 48 or 50% in the market. And also the 2019 general election has also triggered that sell-off, because when you look at in terms of the fundamentals of most of those companies, for most of these companies, their financials are still very strong fundamentally. And we feel that there's still a lot of opportunities in the market.
So let's look at listings. The listings we saw the return of one IPO in the market. We saw one listing in August. That's Notori.
Yes.
Incidentally, the numbers came out 2 days ago or 3 days ago. What do you make of all of those equities market activities as we had this year?
Yeah, it's still very slow in terms of new listing. Just to Notori and Sako adding about
Sako is even yet to list.
Yes, yes,
IPO.
the IPO is still on. We'll be closing on the 9th of January. And that's, if you look at that, that may add about maybe 120 billion to market cap.
Yeah.
And when you look at in terms of the rights issue that we have, in terms of the size this year, it's about 125 billion. Relative to about 350 billion we had in 2017. So that's still very slow. When the market rallied in January, we saw some green lights. Some companies were looking at coming out to issue raise capital via rights. Yeah. But because of the downtrend in the market, valuations now very cheap, and for most of them, it's not really very attractive. And that's why you've seen the slowdown in terms of rights issue that we've seen. WAPCO is raising another 90 billion, and that's ongoing. And when you look at that, it's still not very encouraging for the listed companies to raise capital via equity, whether it's a public offer or rights issue.
So you talked about the fact that investors are, of course, risk-averse that's foreign investors about our market here, given the election exercise that is actually panning out right now. Well, over the years, 2015, 2011, 2007, 2003, I mean, we've had elections, and we ended successfully. Don't you think it's time for these foreign investors to rebuild their confidence in this market?
Yeah, but when you look at the peculiarity of this upcoming election, investors will also need to know there are two major parties, APC and PDP. They need to know if it's APC, yes, in terms of expectation, will be different from if it's also PDP. So what they have done is to reduce their exposure and not necessarily pull out totally from the market. It's just like a net seller's market.
Right. Okay, Ayodeji, but thank you so much for your thoughts here. You're still hanging around, of course, but in part 2 of the program, we'll be able to get some forward guidance into 2019. Stay with us.